What is going on, everybody? JPA Trades here, and as promised, going to be going over that SPX play from Friday. And before we get started, just want to say thank you for all the new subscribers and for all the likes you guys have been doing on the video. And seen like huge likes and huge growth lately, so I just want to say thank you so much and keep it up. All right, so what we'll be going over is this SPX 3900 put we bought for 0.4 on Friday at 3:56 p.m. And I always say mega lotto on these because not only are they closer to expiration, but this is just so you really make sure you're sizing appropriately and really understanding what you're getting yourself into. If you say, hey, I'm comfortable risking a full size position, do that. If you're like, I'm comfortable only risking 1/10 of a position, do that. Only half. This is just so, hey, pay attention that this is a risky play, or pay attention that this is a very volatile play. Make sure you understand what you're getting into going in. So let's get into why we bought it. So we'll go over here to our SPX chart. And if you remember, I said 1 minute is you get a lot of wonky stuff on your chart. So when you're determining more long-term swing plays, you want to use longer time. But for these just very end of the day where every minute matters, this is where the 1 minute chart kind of gets handy. So where did we buy? 356. So let's just go track it back. 59, 58, 57, 56. Okay, what happened at 56? High of 304.58. All right, well, let's just do our little line and see where we start lining up. All right, well, 304.58. Well, what if we zoom it up to maybe like 305? All right, so again, you're splitting a few cents here. So I was watching that 305 range because we had a lot of wicks up to it. We had a lot of candlesticks down to it. And then what you're also looking for in SPX is you want that premium to just decay as much as it can. So in SPY, it kind of holds up a little bit better and you don't see such wild moves. But in SPX, this is just imagine it as a $4,000 stock. So a 1% move on a $4,000 stock is $40 or 40 points, whatever you want to look at it as. So if you're able to get a $5 out of the money, essentially 0.2% away call for 40 cents, you were even able to get this call for 20 cents. The risk reward is just massive there because if you don't hit it, so what? You're out 20 cents and I get it 20 cents, you might have $1,000 worth, you're out $1,000. But if you get that hit like we got here where it just gave it all up and just knifed in the end of the day, these calls, they went from 40 cents and there were some fills over too. So here's I had started selling at 100%, 200% and then kept the other ones. So we hit all the way up to, I think it went to 2.25. I got a fill at 2. So essentially 5x your play in 4 minutes. And that just all comes down to understanding what you're looking at and understand that risk reward. So some people might have said, oh, it broke over here, buy the calls. But there's another, just one of those, you could see it kind of working down lower all throughout the day here. Just a little creep, little creep, little creep lower. So the opportunity was down, not up. It seemed like we were going to keep going down. The risk reward was, hey, I'll put 40 cents in and see what happens. And another thing to remember is SPY and SPX are essentially the same exact stock. Here's the same chart again. But when you're trading SPY, those options aren't going to give you the same amount of juice that an SPX one is going to give you. So if you're looking for something to do at the end of the day, it's not worth it to do the SPY option that might go from, if you paid for a 40-cent SPY option, it might only made it to 80 cents. So 2x reward, which is still really good to double your money, but as you get 5 times your money, obviously you'd rather be in that pool. But they follow each other the same. So if you're trying to learn SPX, a good way to practice as always is just follow SPY, see what happens with SPY, and see what you can tag along with it. Because here, just identical. Here's SPY going down. Always got to remember to do your dollar sign here. SPX, same exact thing. So that's about it for this one. Just wanted to show you that shorter time frames for SPX to kind of get it at the end of the day, and really, really most important thing, understand what you're getting yourself into. That play went from 40 cents down to 20 cents, back up to 250. So if you're oversized and you're using stop losses in SPX, you're going to fail. You need to make sure you're sized appropriately. You're not, it can't be the, I mean, it'll be a good play if it works, but it can't be the play to save you. It has to just be something you're doing that you understand what you're getting into. Don't put your whole account in it. Don't put a stop in it, because you'll just, same way we get our fills off someone else's stop, you're going to be someone else's fill. And if it doesn't work, it's fine, because you know what's risk going in. But if it does work, usually they're huge, huge wins. And I mean, lately we've been hitting a heck of a lot more than we've been missing them. I think we had like a 1,750% one, 500% ones, and it's all just about that risk management. A lot of these SPX plays will go red before they go way green, and it's about just having that conviction in what you're doing, understanding what you're looking at, and then just focusing on your play. So if you made it to the end of the video, just wanted to say thank you for all support again. If you don't mind, leave a like down below, and have a good rest of your weekend.